It's been a down year for this sector, but the opportunity is very much still there. Joining us today is Kuran Francis with the FinTech channel. Kuran, so great to have you back on the show. I love talking to other YouTubers on this channel and getting some of your own perspective on different sectors. And today it's all about nuclear. This has been such an interesting conversation topic the last few months because plenty of investors were in this sector a lot last year when it was at its highs, and they have been hurting for months as these stocks just seem to keep going down. So what's your take on what's happening in nuclear right now?
Nuclear energy is a really interesting area because a lot of the conversation around nuclear right now is how all these stocks are dropping. But if you look at the sector as a whole, the fundamentals just keep getting better. If you look at U.S. energy demand over time, there was this report recently from the International Energy Association, which predicts that U.S. energy demand is going to effectively double by 2030. And a lot of that is being driven by these AI data centers. However, because it takes so long to spin up a nuclear reactor or to bring more capacity online, we're not actually seeing a lot of these companies making additional revenue quite yet. And so there's this big disconnect between when people recognize the opportunity and when it actually affects the companies. And I think a lot of people just haven't been patient enough to wait for a lot of these numbers to fall to the bottom line. And so the fact that these stocks are getting cheaper right now, to me, it just looks like an opportunity.
Yeah, I think that is such a great point to look at, is that even though the price action is going down, the fundamentals are still very much still there and even growing. What do you think was behind the highs that we saw? Was that all just about hype and kind of investor excitement about the sector? Did they get too far above where the actual value was? I just like to talk about why we're seeing the kind of price action we are, and then we'll get into the fundamentals a little bit more.
I think so. I think some of it was these stocks getting ahead of where they really should have been. We saw some really big contracts being signed kind of at the end of 2024. Meta signed a multi-billion-dollar contract for power for their AI data centers. Microsoft was signing some big contracts as well. Amazon's getting big into the space. And so, kind of like a lot of things in the AI space, money tends to just flow wherever the current attention is facing. But a lot of times it flows before the actual numbers show up. And so I really think that kind of the general publicity around it got these stocks ahead of where they really should have been. But in a 10 to 15 year time horizon, I think that it's probably not going to matter too much.
Yeah, that time horizon is the most important piece. And by the way, I forgot to mention, you are going to share 3 of your favorite stocks in the nuclear sector. So we're going to get into that list in a minute. But this broader discussion, I think, is important about the sector as a whole, because many people are already holding some of these stocks in their portfolio and wondering what to do. That time horizon is absolutely one of the biggest talking points I keep hearing about, is that the nuclear story isn't going to magically be ready and fully commercialized, by the end of the year. The build out time for this whole sector is still a ways off. This is more of a long to midterm growth story. What kind of timeline do you see for the stocks that we're going to talk about today?
Yes, there's kind of different timelines for different types of nuclear stocks. And I think that this is kind of one level below what a lot of people are focusing on in the sector. Yes, if you're building a general nuclear reactor, the average timeline to bring one online is somewhere between 6 and 8 years right now. It's actually quite a bit longer in the US because the Nuclear Regulatory Committee for a long time has been pretty strict about the standards on nuclear power. And anytime we see a disaster like we saw in Japan back in the 2000s, they just add more restrictions on top and make it harder and harder to build nuclear, which is good. We want nuclear to be safe, but it also slows down those timelines. What we're seeing now is the Nuclear Regulatory Committee has actually changed fundamentally what their goal is. Their goal is no longer to simply restrict and regulate nuclear power. It is also to facilitate bringing more nuclear power online. And so that should start to accelerate these timelines in the future. The second thing, though, that is helping nuclear timelines is there's new technology coming on where you no longer have to build sort of a power plant scale nuclear reactor. They have new technology called small modular reactors, which a lot of data centers are interested in, where you're basically building a mini nuclear reactor that still produces power, but you're not looking at gigawatts of energy. You might only be producing megawatts of energy. So you're not powering a whole city, you're just powering one data center.
Yes, those are the ones that were the darlings of the stock market late last year. We saw SMR and Oklo really skyrocket in their price, and now they've just continued to go down. Those two names in the small modular reactor sector has maybe been hit the hardest of this downturn in the market in 2026. What is your take on why we're seeing that sudden pullback in these names names and not really recapturing some of the growth those investors saw when they got into those names. And also talk a little bit more about that timeline for small modular reactors. Is it shorter than some of these big nuclear plants, or is it also longer because the technology just isn't there yet?
One of the reasons those stocks dropped more than others, I think, is they were just smaller. Smaller companies in general tend to be more volatile. They trade up very quickly and they drop very quickly. It takes a lot more money to move $1 trillion stock than a $5 billion stock. And so, yeah, for anybody who's investing in that space, expect way more volatility from an SMR company than a company that has established nuclear plants running today. But in terms of timelines, we're actually seeing nuclear reactors, some coming online as soon as 2027. For some of the SMRs, though, we're actually seeing a lot of it focused in the early 2030s. So 2032, 2035, that kind of timeline. So you really are looking at around a 10-year timeline before we really start to see the growth in this area play out. But the issue is, if you wait 10 years to invest, at that point, it's obvious to everybody, and so the stocks are already bid up. And so I think that's why we saw that big run up last year. People just got overly excited, and now that the excitement has kind of died down, this is when I get more interested in the space.
Yeah, I think that timeline is also interesting with the massive need and demand for energy right now. You look at all of the hyperscalers and the growth of AI, that energy is needed right now. And so another concern that I've heard starting to pop up is that these hyperscalers are going to start to look elsewhere because the timeline for nuclear is just too long. Do you think there's any truth to that story, or can there be multiple winners in the energy story simply because there's so much demand right now?
Yeah, I think that's clearly correct. I mean, we've seen coal-fired power plants that were supposed to get shut down that got brought back online just because these companies needed energy so badly. We've seen nuclear energy companies acquiring natural gas companies to kind of fill that stopgap in the meantime. So yes, absolutely, these companies are going to take energy from wherever they can get it. But there's this really great quote from Amazon's global energy strategy team when they were talking to their CEO, and they basically laid out exactly what their plan is with energy. In the short term, they're going to use whatever energy is available. But the quote is, "We have strong conviction that nuclear power is the most economical and credible path to scale carbon-free energy to meet the next decade's rapid capacity growth." So eventually, they want to move to nuclear power. But in the meantime, they're going to stopgap it with whatever they have. Just because they use coal-fired power plants today doesn't mean they're not going to switch to nuclear in 10 years when it's available.
Yeah, I think that means we're going to see a lot of different energy-related stocks, even battery stocks, different kinds of things that are helping to supply power, seeing some really big spikes in the near term while they're trying to fill that gap before nuclear is built out. I know I just heard about a new energy source from a guest that was recently on our show. He says this is one of the biggest discoveries of an energy source in U.S. history. Google just signed a 15-year contract, and Microsoft's Bill Gates just wrote a $100 million check investing in this new energy source. You can scan the QR code to learn more about this company and this stock that right now is small, but could be very massive in short order. It's also important to note you want to check out this report before August 18th, when there's a major catalyst coming that could likely eat away at some of the biggest early gains for investors. So again, check out that special offer now and dive into that other energy source. All right, Kuran, let's get to your list now of the 3 nuclear energy companies that you are most interested in right now. What's the first name on your list?
So the first name in my list plays in the large nuclear reactor category, and it's Constellation Energy. So this is actually the company I referenced earlier that actually acquired one of the nation's largest natural gas power plant companies to try to fill the stopgap. And the reason they're doing this is they have multi-billion-dollar contracts signed today with both Meta and Microsoft, and a potential contract with Amazon on the horizon to start using their clean energy. They're already the biggest clean energy provider in the US, and they have several nuclear projects underway. Plus, the stock price is actually down quite a bit over the past year. So they're sitting at a PE ratio of only around 22. They look like a pretty good value. They have really good growth in front of them, and the technology makes sense as sort of a forward strategy to pursue. So they really tick all the boxes that I'm interested in.
Yeah, this is one of those key players in the nuclear story. I know that big Microsoft investment early last year had many people really excited about this company. But like you said, the stock price is down. And for those of our viewers who watch all of our videos, this is a name that continues to pop up as a buy the dip opportunity in nuclear. and it just keeps dipping. I have a watch list that follows some of the stocks we talk about on this channel. It's Bridget's Buys watch list, and I added this to my watch list on May 5th when it was down. We had somebody on who was saying this is a really good value to buy this company. It's on a downtrend. And since then, again, just the beginning of May, it's down 20% since then. And so it's still on this downtrend. And I think that the fear that some investors might have is, where is the bottom here? When are we going to see this sector turn around? And I know that's a big question, but what are your thoughts on that?
I think one of the issues is just expectations from investors. A lot of people investing in these nuclear stocks are kind of coming over from the AI sector, which for a long time was highly software driven. And the way software stocks tend to move is we figure out, what is the next area to grow, and then the price very quickly reaches all the value there because software is very, very cheap. Nuclear energy is much more like an oil and gas company. So you have all this money from the AI companies flowing into the space, but it's basically just turning into capital expenditures from Constellation Energy. They're just building a bunch of power plants. That isn't going to improve their profitability for a very, very long time. But the thing is, no matter how low the stock price drops, those physical plants still exist. They don't need to, issue more shares in order to raise money to build. And so it's just a very different business model. And if you're mainly used to investing in tech stocks, which to be fair is what I focus on a lot, I think your expectations can be a little bit skewed here. The stock could absolutely drop another 20% in the next 2 months. But if you're holding for 10 years, that shouldn't really matter. All that matters is where it is going in the long term, and are the fundamentals actually improving. For me personally, there are some risks in this company. I mean, one big risk are the timelines. Traditionally, it should take 6 to 8 years to build a nuclear reactor, but in the US, that timeline has been a lot longer in the past. There was one reactor that we started building in 1972, and I think it got completed in like 2012 or something like that. Like, that's clearly too long of a timeline, right? So
Right.
ideally, we want to find something that has a reasonable timeline that could actually have a return. And then the other big risk here is just execution risk. Because you have to hold this stock for such a long time to actually see a reasonable return, there's a lot of time for someone to come in and mess things up. It's just kind of how it works for any super long-term hold.
Yeah, that is absolutely a possibility with this company. Like you said, the timeline of building out this massive nuclear project is a concern. I think it's good to point out that Constellation is still making money. And I know that you kind of said that in our earlier discussion about a big nuclear company versus these really small companies. And it's stable. It's already providing energy, which is in huge demand right now. And so you look at their earnings, and they're doing just great on earnings. So they're making this huge investment into building out this nuclear project, but they also have the income coming in to support what they're building out. Does that make this company a less risky long-term investment for you, looking at the fundamentals of what they already have coming in as for profitability and what that could mean 10 years down the road once this plant that they're investing in is actually open?
Yeah, absolutely. I mean, even before the nuclear story, this is just a classic Warren Buffett, old school investor style stock, right? It brings in a ton of income. Then on top of that, the fact that they are getting more valuable by investing capital expenditures into building up all these plants makes me much more comfortable as the price is swinging currently.
Even to dividend players. So again, one of those boring Buffett stocks, but sometimes it's great to have not only some of those in your portfolio, but a stock like this where it's that boring stock that's steady, but also has a growth story attached to it. So I think this is a great first pick, Corinne. Let's move on to the second company that you're talking about. And this one is definitely less of the giant company that many people will know.
Yeah, so my next pick is going to be far on the other side of the risk spectrum. This one is highly volatile, highly risky, but it could offer more short-term potential. So the company is Centrist Energy, ticker symbol LEU, and they're one of these companies focused in the SMR space, the small modular reactors. And their whole business is basically betting that these small modular reactors are going to get off the ground and are going to act as sort of that not immediate stopgap, but sort of middle term stopgap while they're still building these massive nuclear centers. And they specifically focus on the supply chain before you actually build the reactor. So we were talking before about companies like Oklo, which saw a huge run up in price. This is one of the companies that would actually be a bottleneck for a company like Oklo because they actually focus on the fuel that these reactors use.
So interesting. In all of the nuclear stories we've done, I don't think this has made a listicle video on our channel before in the last 2 years. So I'm glad that you are bringing it up. And you can look at the stock chart. It very much follows along with how SMR and Oklo were doing back in October, November timeline of last year. So they look similar. It's clearly in the same industry. Let's talk about that bottleneck and exactly what they provide that gives them maybe a little bit of a moat moving forward. Are there other companies that are doing something similar to what Centris is doing and offering for these SMR companies?
Yeah, so what Centris does is they focus on high assay low enriched uranium, which is HALEU. It's where the ticker symbol comes from. And it's basically a type of nuclear fuel which is supposed to use lower level enriched uranium. So there's a little bit less regulation around it. And it's really what's focused on for these small modular reactors. It's the type of fuel that they're going to rely on. And what's interesting is they're the only US based company that currently produces this type of fuel. All the other companies are international. And so when it comes to nuclear power, moving nuclear materials between countries isn't really the easiest thing to do. It's not something that's generally favored by administrations. And so as we see the Nuclear Regulatory Committee start to focus on how they can push the US industry forward, this is the type of company that could benefit from what they're doing. And so they have a pseudo mini monopoly on the space for now. It's not to say someone else couldn't come along and start a company as well, but they certainly have a head start.
They absolutely have a head start. But then I wonder, is it a waiting game? Is this company just waiting for those larger SMR type companies to actually take off and get their products to commercialization? Can this company do anything to move the needle until those companies are ready to go?
Yeah, I mean, we're actually starting to see this company see real revenue come in. In fact, this latest quarter, they saw 18% year over year growth in revenue. They're forecasting to grow even faster in their next quarter, which is releasing earnings next month. So it seems like we're kind of at the point now where they are starting to see orders come in and they are actually starting to see real revenue. And so that's kind of the type of small company I like to focus on. I'm not as interested in pure story plays. I like to see a company where the numbers are already trending in the right direction. And that's what we're starting to see right here, which makes me very excited.
So not just a good idea, but something that's actually already proving it's starting to work. And this is a great example of that. I want to get your take really quick before we move on to the last name on your list of if you pay attention to what analysts have to say at all, because when you look at this stock, there are some really great price targets coming in from analysts. The most recent one, a $215 price target, and that just came in a couple of days ago. We do have a downgrade here from 314 down to 264, but either way you look at it, a $264 price target is still huge upside for any investor who would be looking to get in on this stock right now. And I think what's interesting to me is we've continued to see this downtrend in nuclear to the point where many retail investors are skeptical about actually getting into this sector because it's on such a downtrend, but analysts are still bullish. What does that mean to you?
So first off, I usually don't put a ton of stock into analysts. If you look at any study of, how analyst expectations perform versus the market, they don't outperform. It's basically just random. That being said, I do think that there is something to be said with how anti-retail investors are on this space right now. And it's because I think there's a disconnect between where the numbers are moving and where sentiment is moving. It's kind of like a broader story in nuclear in general. Like for a long time, we knew nuclear energy was one of the safest forms of energy. It actually has fewer deaths per gigawatt than coal, fewer than wind, fewer than natural gas. The only form of energy that is safer is solar power. But we didn't build it because there was this general fear of nuclear energy. So there was a disconnect between the actual numbers and how people feel. And I think we're kind of seeing that with the stocks now as well. Only the fear now is that the stocks are dropping. And so people are like, well, I'd better sell out of this, while the actual fundamentals are improving. So it's just a bet against general sentiment, which is a bet that I'm very happy to take.
Right. So often those bets against sentiment absolutely pay off for retail investors. It's so common for people to wait and follow headlines. And once all of the news and the headlines and the hype is out on a certain stock or sector, that's when retail is finally interested. But right now, when no one is talking about it, or if they only have negative things to say, that's the most interesting time to start looking at stocks. And that's why I shared that special report earlier. And I want to bring it up again. If you want to get into a stock in energy that is not making headlines yet, but is about to with a major announcement coming on in mid-August, this is the kind of stock you want to be looking at right now. Again, before it starts to make the headlines and sees that huge run up that will eat away at some of those profits for early investors. So scan that QR code or click the link in the description to get that special report and learn more about this stock in a completely different area of energy that has explosive growth potential. Again, check that offer in the link. But Kieran, before we move on to the last stock on your nuclear energy list, I want to talk a little bit more about the realities of these moonshot stocks in the nuclear sector. And really, I think most of these SMR type stocks kind of fall into this. Before we move on to your last name, can we talk a little bit about the risks that come with this name?
Yeah, absolutely. I do think one thing that's interesting with the analyst targets is they're setting these targets at, double the current stock price. And with a company like this, I think that makes sense because the stock price is probably either going to have a huge run up in price or it's going to go to zero. That's the risk here, right? You're not probably going to get a nice 20% return in this stock. It's either going to perform very well or it's going to lose a lot of money. So personally, this would not be sort of a core holding for me, but I think it is worth looking at some of these smaller stocks because they do hold a lot of potential to rise relatively quickly.
Yes, it's either going to go way up or go way down. And that is so true with these high risk names. It's high risk, high reward, but that risk is also there. So thank you for pointing that out for this one. I also want to add this name to my Virgin Spies watch list because I think it's a great one to follow over time to see how it does. I think I have SMR on my watch list and it's one of the worst performing stocks right now. So I'm really curious to see how this stock and others in the nuclear sector are going to look this time next year. So we'll have to do another follow-up video then. Well, let's move on to the last stock that you have for us today, because I know this is one of your favorite ways to invest in a sector like this.
Sure. So the third stock is going to be probably the most boring pick, but it's the pick that I think most people interested in the space probably would do the best with. And it's an ETF of the space, the Van Eck Uranium and Nuclear ETF, ticker symbol NLR. Now, this isn't my favorite ETF in the world. The expense ratio is pretty high, but there just aren't a ton of good ETFs in the nuclear space right now. But there are some things I like about this. The big thing is in the nuclear space, it's hard to tell who the winners are because, like we've talked about, a lot of the numbers aren't yet showing up for these big players. And so investing in this ETF kind of gives you a broad exposure to the nuclear industry, both in the US and internationally. And we are seeing general trends that seem to be supporting nuclear power. Yes, there's the AI build out. Yes, there's growing energy demand, but there's also just shifting regulation with the Nuclear Regulatory Committee becoming much more friendly to investment into the space, and the US government even subsidizing a lot of the investment that's going here. And so if you're a 15-year buy and hold investor, you probably don't want to worry about picking a stock that might have execution risk, or their CEO might leave, or they might have a nuclear disaster, which would completely destroy the company. Instead, you can just invest broadly into the market with an ETF like this.
Yeah, I know you have several ETFs on your portfolio. If you ever watch the FinTech channel, I highly suggest it. He covers stocks so well and really talks about the fundamentals. I know your most recent video, you talked about some ETFs too. So if you haven't checked out Kieran's channel yet, make sure to do that. You can find that on the collab link here. But I like that you throw in a mix of both stocks and ETFs. And I want you to explain a little bit for retail investors why it's good to own, both solo stocks and individual stocks along with some ETFs.
Yeah, so personally, when I invest in stocks, I put 15% of my income purely into broad market ETFs that just track the market in general. And the reason I do that is it lowers my overall risk. Like I can leave that money there for 20 years and not worry about it. Then I can try to take bigger bets with the rest of my money, and I'm not as emotionally influenced by what the market is doing because I know I have that stable baseline. I think it just makes me a better investor. When it comes to specific sector ETFs, one of the benefits is it takes out the risk of any one company doing something bad. If you were invested in car companies for the last 100 years, car companies in general have not actually seen huge increases in their stock prices since the 1920s. It was actually a very bad area to invest. But if you had invested in just Tesla, you would have done really well. Or if you had invested in General Motors, you would have lost all your money like twice. So you can pull out some of the risk by just spreading your money across an ETF, which will just give you broad exposure to an entire industry.
I think it's a really great example. And I think nuclear is a great place to be looking at that because of exactly what you just said, that risk of one company having a catastrophic incident and crashing their stock price. So I think it's a great argument here to look at an ETF in nuclear. I do want to point out it lowers your risk, but that doesn't mean there's not going to be volatility. If you look at the chart for NLR, it is just as volatile as the rest of the nuclear sector. This one's down over 25% in the last 3 months, and you can see there's been just as much volatility in this ETF as with some of these other nuclear names that we've talked about and that I've talked about with other analysts on this show before too. So let's talk about that volatility risk even in an ETF like this.
So ETFs in general are very volatile, and the more niche your ETF is, the more volatile it is. This ETF in particular, it's not my favorite because it is so small. Their net assets is only around $4 billion. And so, one big investor moving into this, someone like a Warren Buffett or a Bill Ackman, would completely change the stock price, right? It's a fairly volatile ETF, and it is fairly concentrated. The other big risk that I would point out here is if you look at the biggest holdings in this ETF, the biggest holding is actually Constellation Energy. It's around 9% of their assets, and around 5% of their assets are in Centrus Energy. So if you're going to invest in this ETF, I personally would not also be investing in the specific nuclear stocks because it's doubling up your exposure and it can make it even more exposed to, something happening with one of these companies. I would probably pick either the ETF or pick one of the companies you're interested in.
Always such good advice. Thank you so much for coming on the show today and sharing your take on what is happening in the nuclear sector. I want to hear from investors on what you think about nuclear. Are you adding to your position right now? Are you staying away until you start to see a turnaround in the chart and the price action? Let me know your thoughts in the comments. And if you want to look at a broader list of other nuclear stocks in this sector, make sure to watch this video. There's a list of 9 nuclear stocks from mining and uranium to other small modular reactors as well. That is all in this video with our Jeffrey Neal Johnson. You can watch that full interview here.